Hello there everyone, today's video is all about main residence relief in the capital gains tax world. So specifically, this is about a recent court case and it's about a property developer. Now this guy, he bought a house, developed it, sold it, and he repeated that. And he had 4 houses in 5 years. That's how he did it. And he basically said, well look, there's no capital gains tax here because of the principal private residence relief, the main residence relief that says, look, if it's your main residence and you sell it, there's no capital gains. It's probably the most famous part of the capital gains tax code in the UK. It affects millions of people. That when you sell your house, there's no capital gain. However, this series of transactions got the attention of HMRC and they said, no, there's no main residence relief available here, but rather you've got a trade going on. You are trading and flipping properties, and we're going to tax you on income tax rates because under the tax code, when you deal with property, there's either capital gains for property investment or there's income tax for trading. If you're an individual, corporation tax, if you're a limited company as a developer. So HMRC said, we're going to put you on this end of the spectrum, i.e. maximum tax, subject to income tax on the profit when you flip these properties. And he said, excuse me, I'm right at the other end, where it's nothing to do with income tax, it's capital gains, but I can claim the exemption for main residence relief for capital gains. So on the spectrum of the taxes, we go from trading, 45%, capital gains tax generally on property, 28%, but if you're claiming main residence relief, 0%. And this is the camp that he put himself in. He said, look, I'm in this camp here, main residence relief. Every time I bought one of these properties and did them up, I didn't own another property. I just had one property at a time. And it just so happens that I sold it pretty quickly, but it was still my main residence. So he said, look, it was my intention to live in these properties as well before I sold them, after I developed them. Because what happened was, of these 4 properties, he only actually lived in one of them for a while. The others, he had different excuses. The excuses that he came out with was that on one particular property, when it was being developed, he was living with his great auntie who was infirm and he had to look after her. And then on another one, he was sent away to do some work overseas and he had to rent somewhere. So he had basically had excuses as to why he didn't actually take up occupation, even though he was claiming main residence relief. And in the main residence relief tax code, one of the things it talks about, hinges significantly on, is intention. What was the taxpayer's intention from the outset on entering into the transaction? Now, intention does come into various bits of the UK tax code, particularly certain areas of VAT and here under the main residence relief. So when it came to the courts, when it came to taking this guy to court, he basically used this line. He used his defense. He said, look, the intention was there for me to reside in these properties, but through circumstances I didn't. But listen, at any one time, I didn't own any other properties. It was just a single property that I owned, so I should be entitled to main residence relief. Okay. Now, come down here, other end of the spectrum, HMRC's argument, and they said, hang on a minute, there's a profit motive here. You never intended to reside in these properties as your main residence. Notwithstanding the fact you couldn't because of all these reasons you've come out with. It was never your intention. It was always your intention to make a quick buck. You wanted to flip these properties, develop them, sell, make a profit, go on to the next one. So you had a trading motive, i.e. a property developer, property trader, which, if that is the case, then it's income tax. Then it's 40 or 45% if it's tripping you into the higher rate, over 150 grand. So HMRC said, look, you've got a profit motive, it's a trade. That's what HMRC said. He said, no, main residence relief, it's capital gains, nothing to do with trade, and it's 0 tax. What happened in the tribunal was the tribunal actually kind of met them in the middle. They didn't actually say we're going to meet you in the middle, but let's talk about their arguments, which resulted in being in the middle on this spectrum of tax liability. So the tax tribunal basically disagreed. They disagreed with HMRC on the profit motive element. They said this guy is not trading. He's not yes, obviously he's made a few quid, but he's not trading. He's not in the business of being a property developer. He'd had no sort of prior history of this. He's just done a batch of these over a few years, over 4 years, and he's not a trader. He's not a property trader. So that rules him out of income tax regime. However, it's more akin to being a property investor, because the tribunal also, whilst dissing HMRC's trading argument, dissed the guy's intention argument. They said, look, you never intended for any of these to be your main residence. We're not buying the story that you had to go and chaperone Great Uncle Bulgaria in the nursing home round the clock and all this. They said, no, there was no intention for these to be your principal private residences. So the tribunal, they looked at all these things, including what we call the badges of trade, which is a general test to see if you're in self-employment and if you've got a trade. And they ruled that, no, there's no trade. So it's actually more akin to an investment. But even though it's capital gains is now in play because it's an investment, no main residence relief because there was no intention to reside, any degree of permanence. So we're not buying the argument of intention. So they said it's capital gains, it's more akin to investment. The profits thereon will be hit for capital gains tax. Now, capital gains tax, when it's non-commercial property, i.e. residential property, is 28%. So he got landed with a 28% tax bill. He claimed it should be zero. HMRC claimed it should be 45%. Ended up paying 28%. Now, interestingly enough, just trying to read my writing, should never write in green. Penalties. Interesting one. So the tribunal upheld some of the penalties that HMRC had imposed, even though they changed the amount of tax that HMRC were wanting to get. The tribunal said HMRC were right to impose penalties for inaccurate tax returns, that basically this guy should have put on his tax return, I've got this property and I'm doing it up and I've sold it. I think it qualifies for main residence relief, so I'm not going to pay any tax, but I'm letting you know about it. Now, so he got stung for penalties for not disclosing that, which you could see both sides to the story there, because if he generally at the time thought it was a main residence relief exemption, he thought, look, I'm just doing one of these at a time, and I believe there's no tax. Generally, in normal circumstances, when there is principal private residence, you would not put that information anywhere near your tax return if you've sold your main residence, so it wouldn't go on there. So, but this guy, because he did, it's a little bit different. It's not everyone that sells 4 of their main residences back to back within 4 years. So HMRC and the tribunal certainly said, look, he should have had the nous to know that there was something, a bit out of the ordinary here, and he should have put it on his tax return, declared it, and even said, look, I'm not paying any tax because I believe in this, which would have ultimately resulted in, yes, it still could have been taken to the tribunal and he lost, but then the penalties would have been wiped out because he gave full disclosure of what he was doing. So an interesting add-on at the end there, just in terms of main residence relief. If you're doing something out of the ordinary like this guy, not only may you be clobbered for higher rates of tax than 0%, but you may get hit for penalties as well. So anything out the unusual, like in this circumstances, frequency of buying, developing, selling, particularly if you're trying to claim main residence relief, then yes, do be very mindful. So just an overview there on the different types of the taxing regime for buying, developing, selling properties, and ultimately what happened for this guy, where we landed at the main capital gains tax rate. So if you like this video, please do subscribe, and as always, I'll see you soon.